Okay, can we read the question once again and we'll move on? This is the first question to November 2019. ICAN examination skills level, question 3. Can somebody read it once again?
Family PLC is the parent company of Children Limited. The statement of financial position of the two companies as at 30th September 2019 are presented below. So please, can you go scroll upward?
Can you list those items, not the value, so that we are conversant with them?
Okay, assets, non-current assets, office building complex, plant and machinery, investment in children's shares, current assets, inventory, trade receivables, other receivables, tax assets, bank balances, total assets, equity and liabilities, ordinary shares of N1.50 each, retained earnings, current liabilities, trade payables, other payables, overdraft, total equity and liability. The following information is relevant. Children Limited had been making continuous losses in the income statement over the past 3 years. Recently, it is steadily returning into a profit-making entity. Family PLC bought 4.8 billion equity shares in the Children Limited a year ago, when Children Limited had retained earnings of 144 million naira, and the fair value of non-controlling interest was 3,396 billion. Profits were evenly distributed over the years. During the year ended 30th September 2019, Family PLC sold goods with an invoice value of 576 million naira at cost plus 20% to Children Limited. Half of the goods were still in inventory of Children Limited as at the end of the year. Children Limited owed Family PLC 72 million naira for the goods it purchased during the year ended September 30th, 2019. Included in other payables was the proposed dividend of 2.5 kobo per ordinary shares of Children Limited for the year ended September 30th, 2019. Both companies had agreed that the proposed dividend should be paid by the directors of Children Limited before consolidation required. Prepare the consolidated statement of financial position of Family PLC as of September 30th, 2019.
Thank you very much, the reader. Now I'll start from the end, where she stopped. First thing you need to know is that the parent is a PLC. The subsidiary is a limited company. Okay, remember there's a discussion about PLC and limited company. I explained the money from the Nigerian perspective with respect to dividend. When is dividend considered to be appropriately declared for the payer to recognize an obligation and for the shareholder to recognize the right to receiving that dividend, in line with IAS 10, which borders on event after the end of the reporting period, which some people call post-balance sheet event. Okay, now what happened in this case is this. Because it's a limited company, it is not mandated to get ratification at the AGM because limited companies are usually owner managed. And that's why a phrase was stated there that both companies had agreed that the proposed dividend should be paid by the directors of Children Limited before consolidation, which means there's no argument about whether the proposed dividend should be recognized as liability or not. And that's why in the books of the company, we are told that this has been included in other payable which means it has been recognized. Okay. Even though under IS1, you will have learned that when you are giving information about proposed dividend, and the dividend has not been ratified by the shareholders, you should not recognize as a reporting date. That is only applicable to PLC, but not applicable to limited, okay, in all respects, okay? Also in some jurisdictions, as I've explained earlier, who has the ultimate authority to approve dividend for it to be final is that person that we need to consider as at what time is that approval obtained before we can establish that there's an obligation. Which then means that if the board of directors are the final approver, therefore, one board of directors has approved as at the reporting date, it constitutes a liability to the company. But if the shareholders are the final approver, even though the board has approved before the year end, once the shareholder has not approved up to the year end, but approving only after the year end, it does not constitute a liability as at the year end, which is what I explained in the morning. But in this question, there's no cause for alarm because the information is explicit enough, stating that the directors, the companies have both agreed, and this has been declared before end of the year, and it constitutes a liability which already has been included in the books. Okay, which then means that what do you do? When you have dividend payable and dividend receivable, what then do you do in your consolidated account is for you to eliminate. And that is what that speaks to, which means we eliminate the dividend, which will have been recognized as other receivable in the books of the parents and other payable in the books of the subsidiary. Again, they said the dividend is 2.5 kobo. First, let us assume there is no half kobo. When you get 2 kobo, what does that mean in Naira? It means 2/100. Abi? Since they've now put half there, which means half is 0.5, Abi? Which means 2.5/100. Take note of that. Okay. Now, the next thing is first information here says Children Limited has been making continuous losses in income statement over the past 3 years. Recently, it is steadily returning into profit. Okay, family bought 4.8 billion shares in Children Limited a year ago, when Children Limited had 144 million as retained earnings and fair value of NCI as 3.396 billion. Profits were evenly distributed over the years. That is irrelevant to us, okay, because we have obtained sufficient information that will make us determine pre and post acquisition. Okay, that is that. The other aspect is during the year ended 30th September 2019, Family PLC sold goods. Now, it is a parent selling goods in the same manner again, okay? Sold goods at an invoice value of 576 million. Remember, invoice value means at selling price or as the worth of value. But unfortunately, they gave us cost plus, which means they gave us markup instead of margin. Because we already have value, what next I expect is for them to give me margin. But unfortunately, they gave me markup. Therefore, what I have a responsibility of doing is to first convert markup to margin. And we are told that half of these goods were still in inventory. Okay, which means half is sold, half is unsold. It makes it 50-50. Life much easier in this case. Okay, the next one is that Children Limited owed Family PLC 72 million for the goods it purchased during the year, which means that demonstrates intercompany balance of 72 within trade payable and trade receivable. That's all. That's all. Now, let us start. What is the group structure? Family. Acquired children. What stake is that? We are not given the stake.
We're not giving
Okay.
shares.
Therefore, we have to determine that. But acquisition took place when? When they said over the last 3 years. No, when was the acquisition? If you are not given, it doesn't matter.
On 1st of July 2017.
A year ago.
You said a year ago. A year ago.
Okay, a year ago. That means a year ago to today will be date of acquisition. That is 30th September 2018, which means today is 30th September 2019, 1 year apart. And this is not acquisition during the year. Therefore, the information of profit evenly distributed over the years does not matter. Okay, now let us determine percentage holdings. How many shares were acquired? Were 4.8 billion. Out of how many?
9,000. Sorry.
6,000.
6,400,000,000 shares.
Now, we don't know the number of shares of children, but we know that we can get it by dividing the share capital with the
Nominal price.
What is the share capital?
9.6
million, Abby?
Yes.
Yeah.
Divided by, now the examiner gave us 150 kobo. This is where those people that don't pay attention will have problems, because people will believe share capital and shares are the same thing. Now the examiner gave 1 naira,
50 kobo.
You know, Yoruba people say Ashiri Eko kò ní tó lójú ewé, but in this case, if you are not careful. Now, 9.6 divided by 1.5.
6,400,000,000 shares.
That's 6,400 million what? Shares.
Yes.
Okay, which is equivalent of what? 6 billion. 6.4 what? Billion shares. What percentage is that?
It's 75.
75%. 75.
75 what?
Percent.
Which means I can come here and say 75%. And what? 25%.
25%.
That is possible. Now the next one is retained earnings. Children retained earnings as at 30th September 2019 was how much?
480 billion.
480 billion.
Million, not billion.
Oh, sorry.
Which we divide into 2. The one as at 30th September 2018, which is pre-acquisition, and our what? Post-acquisition profits. What is pre-acquisition?
144.
144.
Okay. If that is 144, what is the movement in profit?
336.
480 minus 144, that's 336 million. Thank you. Next question. NCI was measured at fair value. That's not, they've assisted us. Okay. We have issue of sales, unrealized profits. Unrealized profits on sale of what? Goods. By who? By family. To who? To children. This represents a downstream what? Transaction. Okay. Now, profit on sales. Because we are given value, what I needed is margin times the sales value. And the sales value is given to me as how much? 576 million. But unfortunately, what was given to me was a markup, Abi?
Yes.
Therefore, in this case, convert
Margin to markup.
margin to markup.
No.
Now, what is markup?
To margin.
Markup is profit of cost.
Okay, sorry, we are converting from markup to margin. Thank you. Convert from what? Markup to margin. Markup is profit over cost. And we are told is what percentage?
20%.
20% is 20 over 100. Hence, margin is profit over selling price. And let me say sales value, which is the same thing as profit over cost plus profit. That gave me P stands for 20, C stands for 100, and P stands for 20. That is 20 over what? 120. I don't need to put it decimal place. I'll just leave it like that. Therefore, I can borrow a leaf and say 20 over 120. What does that give me?
Give you 480.
Times what?
4.8.
That's give me 96.
96.
Give me what?
96.
96 million. Okay. Now this 96 million is the entire profit. But what I need is what? Unrealized what? Profit. Of this 96 million, of the profit of sales of what? 96 million. I have to split it into realized and what?
Unrealized.
Unrealized. And we are told that it's 50-50. Therefore, nobody will even know whether I'm correct since it's 50-50. Therefore, this will be what?
48.
This 50 is for unsold. This 50 is for what? Sold. Yes, what I'm interested in is this part.
Unrealized.
Which that means that my unrealized profit here
26.
is percentage on sold multiplied by what? Profit on what? On sales. What is that?
96. 50%.
Of 96.
50%.
48.
That give me what?
48.
48 million. Now, somebody will say, this guy is just wasting our time. Why can't you take shortcut? The day of recording, when it comes, that's when you know that shortcuts leads to hellfire. If you read your Bible well, they'll tell you the smooth road leads you to hellfire. That's why when you see that when they do road and the express is no pothole, nothing, everything is smooth, accident is always much more because people will just overspeed, no control. Okay, that is it. Just be careful. Okay, now we've done that. The transaction emanated from the parent, which means the profit reside with the parent, and we are taking it back. Will it affect NCI?
No.
No.
Therefore, we only charge to the parent. And we use it to reduce the group what? Inventory.
Inventory.
How much?
48 million.
48 million.
That is that. The next adjustment is intercompany balance. They told us 72 million. Therefore, there's no information that it is not in agreement, which means I quickly go ahead to say elimination of intercompany trade balances. One is payable, one is what? Receivable. Therefore, I'll trade payable of who? Of children. And credit what? Trade receivable of family. With how much?
72.
72 million. Any question? That's straightforward.
Yes, sir.
Now, dividend. We need to carry out dividend analysis. Dividend what? Analysis. In the morning, we concluded that every time you must analyze your dividend. Now, children declared how much
2.5
as total dividend? It is simply, it declared 2.5. That's 2.5. If you want to express kobo in naira, you divide it by what? 100. Okay. Times how many shares? What is the total number of shares in that company? Remember, 6.4. Can you remember?
9,600.
Not 9,600. Shares, not share capital. Dividend is paid on
6,400.
shares, not share capital.
4 million shares.
Careful. 64 million shares.
6,400.
Yes. 6,400
billion.
million shares. Okay. And that gives you what?
160.
2.5 divided by 100 times 6.4. Everything in millions. That is, it gives me 1.6 million. Is that not? No, that's 1.6. Is 1.6 wait. 2.5 divided by 100 times 6,400. That it gives me 160 million naira. Now, this dividend of 160 million naira is payable to share what?
Shareholders.
Hold on.
In what ratio? Family?
75 and
5.
5.
25.
NCI with others.
25.
25.
25. Therefore, what is 75 of 160?
It will give you 120.
120.
120.
120. And this will give me what?
40.
40.
Now, what is intercompany? Intercompany
120.
is this one, have you?
Yes.
Okay, this is intercompany. Balance. Therefore, what do I do with intercompany balance? I come here, eliminate of intercompany dividend balances. Let me write it clearly. You guys, thank you for tolerating my handwriting. But to me, my handwriting is very beautiful.
Yes, so very, very beautiful.
Very,
If-
very.
I don't think many of you can write with the device I'm using to write. Your hand will be shaking
Seriously.
because it's not as easy as that.
So it's
Yeah,
mouse
it's
now.
not easy.
Okay. That's why I told you that my handwriting is very beautiful, whether you like it or not. Okay. Debit. Now I have to debit liability to reduce it. Therefore, debit
Other
dividend
payables.
payable,
It was
which is in other payable. Yes, I know.
okay.
Which is in other what? Payable. Is that
Payable.
not?
Yes.
Yeah. Yes.
Of children.
Children.
And credit what?
Other receiving.
Other
Dividend
receivables.
receivable. Which is in what? Other what? Receivable.
Receivables.
Of
For
who?
family.
Of
Family.
Family.
with what? With the intercompany
Dividend.
Dividend.
Payable.
of how much?
120.
120.
120 million. Does it make sense?
Yes.
We finish solving the question. Every other thing is those child's play we always do.
Good way.
Good job. Cost of business combination. Family investment in children. Can you go back to the investments? It was given to us without any other information and it's expressly stated. 6028. Abi?
6.
Yes.
Yes.
Okay. NCI was to be measured at fair
Value.
value, and it was given to us to be
396.
3396.
9424.
96 plus 6028
944.
9424.
9424 are compared to the fair value
Of children.
of the net assets
Children.
as at the date of what? Acquisition. Share capital. That was 96 in Naira. There's no premium. Pre-acquisition reserves. Remember, we had that to be 144, and that should give me. There's no fair value adjustment in this case.
9744.
9744.
600 plus 144,
744.
9744, and that give me what?
Negative
320.
320.
Negative what? Goodwill,
320.
which we are going to recognize as what?
Gain
Gain
On
also.
the
or
value
purchase
of-
or bargain or
Purchase.
purchase of purchase.
How do we treat this gain or bargain purchase?
Solely to the parent.
Solely to the parent. 320. Now, consolidated reserve. And NCI as at the reporting what? Date. So I'm writing 2020. It's 2019. CR and CR. Or figure in million. Now let's pick it one by one. Okay. Family retained earnings.
$1,260.
1260. NCI as at acquisition date. How much?
3396.
3396. Share of post acquisition profits. Ratio 75/25. How much is that? We are sharing how much?
336.
336. That is 84,252.
336 times
Yes.
0.75. 252
252 and 85.
and what?
And 84.
84. 252 and 85.
We had an adjustment for unrealized profits. And we said we should use it to reduce our profits. It doesn't affect NCI 48. Less unrealized what? Profits on inventory 48. NCI is not what? Affected. Anything that affects profits?
Gain from bargain purchase.
Gain from bargain what? Purchase 320. Add gain on bargain what? Purchase.
Family.
320. All things being what? Equal. What do we have?
1784.
1260 plus
1784.
plus 48 plus 320. 1784
Before it's
and 3396 plus
3480.
3480. That is it. Okay. Family group. Consolidated statement of financial position as at 31st December 2019. All figures.
Sir, it's 30th of September, sir.
September, sir, not December, sir.
September. Okay, please. Thank you. You know, we are used to December year end. Please always take note of that. That probably may have affected us if we have tried to apportion. Please take note. Thank you. Okay, I think there was a place I wrote December also. Okay. Okay.
I doubt that.
Okay.
Nope, I doubt. This building complex.
Okay. Assets. Non-current assets. What's my non-current assets? I have
Office building complex.
okay, I'll just say property, plant, and what? Equipment. I can lump everything together, or I say this is further broken down into office building, You can keep the complex and plant
Plant and machinery.
and machinery. Let me pick them one by one. 5,000 plus 1920.
Plus 1920.
That should give me 6920.
6920.
7,000
7,000 plus 6,000.
plus 6,000.
13,000.
That should give me 13,000. Investment cancel out and there's no goodwill. Therefore, that gives me 19,920.
19,920.
Current assets. I have inventories. Inventories 36
plus 19
Plus 19.
plus
Minus 40.
19
Minus 48.
Minus 48.
minus 48. What does that give me?
5452.
I hope I'm relying on you. 5452.
Yes.
Trade receivables. What do we have?
4,100.
plus 17
Plus 17. Remember, we have payable intercompany 72.
Minus 72.
72
And then 75. 72 rather.
Yes.
Remember this
72.
72? The information was
Yes.
given to us somewhere.
yes
This 72, have you?
Inventory
This
liability.
is 48.
Yes.
And this is the
That
72.
information 3.
Okay.
Mm-hmm.
What does that give me, please?
5728.
5728.
Other payables.
other receivable
Other receivables. Sorry.
Receivables.
What do I have?
300.
plus 20
Plus 20 minus what? Intercompany
Minus 120.
dividend.
120.
Can you remember intercompany dividend?
Yes.
Yes.
This intercompany dividend. Okay. Give it to me.
200
200.
400.
200
100.
Yes, 200.
100.
Sorry, 200. 200, sir.
200.
Deferred tax,
Yeah.
current tax assets.
200.
0.100.
And what? 100.
100.
100. What else?
Bank balances.
Bank balance. 100.
1440 and 840.
What does that give us?
220
80.
2280.
2280.
2280.
2280.
Can we add everything?
$33,000.
1,000.
13.
13,760.
160 plus 19,920. That is 33,680.
13,760.
That is my total. Is it 760 or 780? It's 780.
680.
Okay.
It's 680.
Financed by equity
It's 680.
and liabilities. Share capital and reserves. Share capital, family. How much?
21,600.
21,600.
Retained earnings.
consolidated
Consolidated within reserve.
Consolidated. How much?
174
That is
1784.
1784.
784.
That's 2, 3, 2,
Like this,
23384.
Yeah,
23384.
that's 21600 plus 1784. That's
23384.
384.
non-controlling
Equity.
3480.
non-controlling interest is 3480. What's my total equity?
26864.
26.
864.
I don't have non-current, therefore current liabilities.
Trade payables.
Trade payable.
Trade payables. What do you have?
1,000
1,080.
280.
Minus
72.
Remember,
Yes, minus 72.
it's 72.
Yes.
What does that give us?
2,200.
2208.
Okay, this
Yes.
2208.
2208.
okay. Other payables.
928.
928 minus 200 minus 120.
Minus 120.
Minus 120.
Minus
120.
120. What does that give me?
1008.
10. Sorry.
Yeah.
1008. Remember,
08, yeah.
this 120 is this, have you? Can you see?
Yes. The one we used.
Next,
Overdraft. Overdraft.
overdraft.
1,680
Plus
plus 1,920. This one.
1,680.
Plus
Plus what?
1,920.
1,920. What does that give us?
3,600.
600.
3,600. Add it together.
3,600.
208.
600. You are drawing us back. This
Plus
is happiness. 6,816.
816.
All things being equal.
33.
Total equity and
680.
liability. What do you have?
33,680.
3,680.
336 what? 80. Who got it right?
I do, but I have a question.
Yeah.
I didn't finish though. I got
I
confused.
got it, but
What
I
is
have
the
a
question you have?
The way you calculate the dividend, my understanding is that dividend is being
It's
paid,
just that 120.
the dividend is being paid from the reserve of the subsidiary.
I'm hearing you.
My understanding is that dividend should pay from the reserve of the subsidiary.
Reserve of subsidiary. They've deducted it before now. You want to deduct it again?
No. I just calculate based on the percentage they gave to me, and I get the same 120 million.
What percentage did they give to you?
I just said 2.5, like 2.5 multiplied by 480 million, and I got 120 million. I just
same thing we did now. 2.5 is in kobo, and I put it, express it in decimal. Okay, can you multiply 2.5 times 4.8 million? What do you get?
120 million.
That's not what you get. Press your calculator. Press 4.8 billion. Press it on your calculator. I multiply it by 2.5. What will you get?
Something billion.
Divided by 100.
Don't divide it by 100. I'm quoting him directly. Because he said, wait, your guy, 2.5 times 4.8 billion. How much is it?
I have 1,200.
That's 12,000.
That's not what is there. Just wait. Okay, listen as a student, please. Press calculator. Press 4.8 billion into calculator. 48000. Press it in billion in your calculator. Have you pressed it?
Oh, it's laughing.
I'll come you. I have 12 million.
Okay, why are you are not, see, you are not paying attention to instruction. As a professional, instruction is very key. Don't jump the gun. I said press 4.8 billion in your calculator. That's the first instruction I gave. I have not told you to do anything.
Okay, 4.8 million.
Billion, not million.
Billion,
That's what
not
the
million.
question.
Now why they make mistake?
Okay, sir. I've done that.
Multiply it by 2.5.
It's 5.
Times 2.5.
What did you get?
I have 1.20 times 10.
And that is what?
Yeah.
Call it in Naira.
Not 1.2 big.
Yes.
One,
See?
2 billion.
1.2
You are
billion.
getting trillion, Abi, or
Yes.
1.2 trillion. That's what you got. Divide it by 100. Do you get what I'm saying now? What happened there is that you have not expressed it in kobo. When I say I'm giving you 2 kobo times 100 shares, how much will you get in Naira? If you just say 2 times 100, it will show as if you are getting 200 Naira. Whereas you are getting what? 2 kobo, because you must divide it by 100 to convert it to Naira.
Okay. I got it now.
That's what I'm explaining. Please let us pay attention more. Don't see, the problem with some of us is that we always want to do shortcut and not see. The day you enter problem with those shortcuts, that is the day of reckoning. Let us pay attention. For you to learn in life as a professional, you must always unlearn to learn. If you don't unlearn what you believe you know, you will not learn, because you always want to have problems like, this is supposed to be, whereas others are already learning new things. You are still struggling with, you want everything to always reflect what you know in the past. That is not learning. Do you get what I'm saying now?
Right, sir.
Okay. Any other question? I expect there are many questions you guys can ask from this question. My spirit is telling me that we have 1 or 2 persons that might not have some understanding or need to ask questions, but that person is shy. If you are the one, please ask now, because my spirit cannot deceive me. You know, like the Bible says, if you deny me in this world, I will also deny you before my Father. That is, if you are shy of asking questions now, the day of examination, you look at me, I'll be shy also. I won't be able to look at your face. Any other question? Any question? Or somebody on the WhatsApp, asked for treatment of transaction costs. You know, I gave you explanation. I gave you as an assignment. Okay, today is already night, and I believe that some of you are tired because I could observe 1 or 2 persons yawning. when they are trying to talk to me or give me answer. And I understand that you have been in class since morning. Therefore, I need to take that into consideration so that anything worth doing at all is worth doing well. Therefore, which means I'll find another day in which we'll solve or try to solve together those two questions. Let me share you the slide again to see those two questions. Sorry, I'm coming. Let me share this with you guys so that I can start downloading. Because I know that some people's system may be analog. It takes time to download. Now, what I'm sharing with you now overrides what we have done from month to night. That means I've combined all the notes as one. Therefore, if I send you this, you can always, how will I say it? You can always delete the former one. But before you delete the former one, ensure you have gotten this so that it will not be like Yoruba added that says, remember, I think I've made this joke, okay, not in your class. Imagine you don't know something and you are copying somebody in the examination. 30 minutes before the end of the exam, the person has discovered that he has made a mistake and he canceled everything and started all over again. What will you do if you find yourself in that shoe? Will you also cancel? Will you cancel? Nobody's talking.
Just leave it like that. And you believe God.
Yeah.
Pray to God.
Okay. In the next 30 seconds, I've dropped that note for you guys. Please ensure you copy the notes. Okay, now let me share a slide with you. Please, again, I can share it and I want you guys to go and solve it. The assignment I gave to you guys, okay, where is the assignment? Can I figure it out? Okay, I think I can figure it out. Can you see it? Can you see this assignment? You know, we have done practice 1 and 2, and we've done practice 3, but we tried to change the question. Now, this is the original question 3 and 4. Please go back to our discussion on treatment of transaction costs. And try and solve it. I'll create a time where we are going to solve this question. Now, I want to put this to you. If you have not completed, the, what's it called? If you have not completed the form we sent to you, evaluation form, please ensure you complete it. Please ensure you complete it because it's going to be good for feedback mechanism so that we can be able to more or less implement changes as it may be required. Is that okay? As it may be required. Okay. And secondly, I want to seek your view. Which one is more effective, this one or the class?
I prefer this one.
This one, no. This one is more.
This one is more effective.
Like, I also prefer this.
The online is better.
I
The
understood
Zoom class.
more by online than the school class.
Okay, just wait.
For
You
calculation
ask,
courses, so not all these theoretical courses that.
no, just wait. I'm only speaking for financial reporting. Now, that is my class.
Okay.
Anything you want to say is my class. Why I'm saying that is because I'm going to tell you something later. Okay, now, why I'm asking this is this. Do you prefer, hello, somebody is speaking at the background. Can you mute? Who is that Yoruba woman? Okay, Can you mute? Now, let's look up, please. For my class, do you prefer I continue online or we continue when everything is stable or stabilized? We continue in the class. Which one do you prefer?
Sir, please continue.
We prefer online. Online.
Okay, if you prefer online, can you do a thumb up on your chat? Let me see it so that instead of all of us talking at the same time.
Thumb up or raise hand? Which one?
Thumbs up.
Thumb up. Thumbs up.
Okay.
Thumbs up. Okay.
Whether raise hand or thumbs up, they are the same thing. Oh yeah. I can only see 3.
Hello, sir.
Just wait.
What
Is either you raise your thumb up. I can only see 5 here.
We are still on it now.
What does it take to put thumb up?
I'm looking for the emoji.
Just use anyone you can see there.
That's not okay. Mon ṣe lecture now. Lecture wo ló ṣe? Tilẹ̀ òbí àmọ́ wá ṣe.
As I do it.
Okay, what I can see is just barely above average. Some have not raised up their hand, which means they prefer faithful class.
And combine the box. Maybe today.
Some people are coming up removing it. Is it that we don't know how to operate the system? Just pick anyone you want. Okay. Okay. Now, okay. Now, let me now explain my own perspective. The beauty of what I've seen is that for my own class, online is more effective on the premise that 1, it's make it more efficient, okay, to do. 2, it gives room for, for example, there's no disturbance.
Yes.
Where I am, you're at your place, no side talk, nothing like that, and all sorts of things. And thirdly, it gives room for you to have recordings, whereby even if peradventure you don't grab it all, you can always go back, play it, and see what has gone wrong or what has gone right for better explanation. Okay. And another thing is that it gives us room to even create separate groups where we can discuss without disturbing other groups. You can say now. You could see that you guys were able to discuss within your group, smaller group, without hearing the voice of other groups and some other things like that. But in a Nigerian context, one thing I found negative about online is because of our network. Yes, not everybody is opportune to have a strong network, but it's a matter of time. In the future, especially with 5G and co, I think network will not be a barrier again. The other barrier I see is that there are some people that when they are on their own, even though they are online with others, they still feel like they are on their own. They are not gingered to do things until they sit with people and they see people around them to say, this person is doing this, let me also try and struggle. While some believe that I better do things when I'm alone without disturbance and some other things. It's a mix of everything, but there's no problem, okay? Thank you very much for the participation. And I think you guys have more or less contributed immensely and positively. Please download the material. The recordings will be sent to you. And this recording will come in 2 phases. The first question is one recording. The second question is another recording. I'm going to send you the 2 recordings immediately after this, once it's ready and posted on YouTube. Is that okay? If you have any other question, can you pinpoint it now before we call it a day? Take notes. Let me share this let me share this question. That's the assignment again, so that for people that have, I think somebody also shared it on the WhatsApp group, but let me share it here again for those that may have missed it. Okay. I've shared it once again. You can download it. Yes. What
Yeah,
I
so,
said.
so I was one that asked about the transaction cost. So I actually have the question, but I know you mentioned some things that I could not remember how you said we should treat them. So that was my question. And there's no explanation. I tried checking the business combination PDF that we have, whether there's any explanation, but I didn't see any.
But we explain it in class, I mean.
And so I see, that's why online class is good to an extent. So if it was online class, I would have been able to go back and pick what you said.
Okay.
Because
What
really,
I
you
think
think you
that,
can remember, and then you won't
yes.
be able to
Don't
remember.
worry. Let me give you an opportunity. Supposing, one thing again is that as a professional, you must have reference material like text you need to have. You don't just rely on notes, because you need to look at other perspectives, other things, read up things for you to have ground knowledge of it. Not just what I've taught you alone you look at. But I'll give you opportunity. I think I've shared my textbook on Amazon now. Are you seeing it? Are you seeing it?
Yes, sir.
Yes, yes.
Okay. Now I think that is on chapter 4. Let me check. Is that chapter 2? Okay, no, it's going to be in chapter 2, I guess. Basic principle. No, it's not there. Chapter 3 is this. No, okay, it's going to be in chapter 1. That is contemporaneous issue in business combination. Okay. Is it? No, let me check chapter 3.
He's doing something. He's still doing class.
It should be in this chapter 2. Yes, chapter 2, contemporaneous issues in group accounts. Now, this is what I explained to you. Madam, can you read this now? Acquisition related costs. Can you read it?
Have to increase the font a bit, bolding it a bit, sir.
Okay, let me do it for you.
Thank you.
Is it increased now? Is it increased?
Not yet, but let me just, okay,
is it big enough?
Now. Yes, it is,
It is, Abby?
Yes, sir.
Yes, sir.
Okay, thank you.
Okay,
Yeah,
so the original IFRS 3. The original IFRS 3 in 2003 required fees, legal accounting valuation paid in relation to a business acquisition to be included in the cost of investment, which meant that they were measured as part of goodwill. Under the revised IFRS 3 in 2011, costs relating to the acquisition must be recognized as an expense at the time of acquisition. They are not regarded as an asset. Cost of issuing debt or equity are to be accounted for under the rules of IAS 39 or IFRS 9 and IAS 32 respectively. Acquisition-related costs are costs the acquirer incurs to effect a business combination. Those costs include finder's fee, advisory, legal, accounting, valuation, and other professional or consulting fees. general administrative costs, including the cost of maintaining an internal acquisition department and cost of registering and issuing debts and equity securities. The acquirer shall account for acquisition-related costs as expenses in the periods in which the costs are incurred and the services are received, with one exception, which is the cost to issue debt or equity securities shall be recognized in accordance with IS 39 or IFRS 9 and IS 32 respectively. Technical note.
Yeah.
Technical notes, all expenses, including that of a professional accountant and solicitor to the business combination, are to be written off as incurred. However, IFRS 3 and IS 32 require the cost of issuing equity to be treated as a deduction from the proceeds of the equity issue. Share issue costs will to be debited to share premium accounts. Issue cost of financial instruments are generally deducted from the proceeds of the financial instruments.
Does that make sense to you now? Now, let me now break it down further. What we said is this: acquisition-related cost or transaction cost other than the purchase price in a business combination can come under three headings. The first one is pure expenses. Pure expenses are those ones like you pay professional, you pay lawyer, you pay all sort of consultants, administrative, and all sort of things. Those ones are to be expensed directly, which then means that if it has not been accounted for, when you now have the information, just go and expense it. But if it has been accounted for and you are told that it was not expense, it was rather capitalized along with the investment value, you know that that is a wrong accounting. What do? You reverse it and correct for it, which is a similar question you have in the assignment. The second category is transaction cost or acquisition-related cost that relates to issue of shares. And this is only upon share exchange. Remember, we have discussed share consideration where you have to issue share in exchange. And at every point you issue shares, there's a cost to it. At least you pay stamp duty, is a cost. At least you pay issuing house. Those companies, they call it investment house or advisory, financial advisory house and co. That will help you raise those shares. That will help you file it with CAC, file it with NSC and all sorts of things. Those ones relate to issue of shares. All of those ones will not be expensed. Rather, they'll be used to reduce your proceeds, which means what you are saying is that instead of you to expense it in profit or loss, you charge it directly to share premium. I told you in class that peradventure you don't have share premium account, you charge it to another capital reserve. Peradventure you don't have capital reserve, you charge it to your retained earnings. Do you get what I'm saying now? And that is what I've said. The third category is if you have to raise loan or debt to be able to buy a company. Remember debt consideration we discussed. You still have to incur some costs in raising debt. Broker costs, regulatory costs, and all sorts of things to register that debt instrument. Those costs also will not be expensed, but rather it will be used to reduce the proceeds of that, that bond or that loan. And in that case, it will be used to reduce that liability rather than expense in your profit or loss. Is that okay? And that is what I gave as my explanation, which is what is being discussed here. Are you better off now?
Yes, sir, but sorry, I just want to clarify something. Say, for example, now we were told that investment in subsidiary is 50, and then they now give us an information like the question 4, whereby they said maybe 1 million out of it is for all these legal and the likes, and then the 2 million is for issuing shares. So now, how are we supposed to, are we going to be given that information that 3 million is part of the investments we are seeing in financial position?
Any information given to you, you have to treat it based on what is the best approach to accounting for it. Somebody gave you 50 million as investment, and he told you that in that 50 million included ₦1 for office for business.
No, we're not told it was included. We're just told that they incurred this cost and that cost. Not like we're told that it's included in the investment.
No, it was stated now, madam.
It was stated.
That means you did read the question. Let me share it again. Please let us painstakingly read information so that we are not misquoting what is clearly written. Please, can you read practice question 4? Let me enlarge it for you. Please read the first paragraph.
Okay. PAMI acquired 24 million of ordinary shares of MAMI on 31st March 2016, when the balances in the latter, share premium and the retained earnings, stood at 40 and 20 million respectively. The subsidiary was acquired by the combination of cash and shares exchange, which has been accounted for in the parent's separate financial statements. Included in the investment amount is the transaction cost of 3 million incurred by PAMI, which comprises of 1 million naira from professional fees and due diligence conducted on the acquisition, and additional 2 million as a result of the issue of shares made in exchange for acquisition of MAMI as at acquisition date.
What does the question tell you, please?
Okay, so the 3 million is included in the 51 million we have.
Yes. And should it be included? That's the question you now ask yourself. Should it be included?
So from your explanation,
no,
I don't know.
Not answer my question. Should it be included?
It should not. It should not.
Okay. Where should it be charged to?
So the 1 million should go to expenses, and then the 2 million share premium.
Exactly. Therefore, what entry are you going to pass to correct it now?
Okay, so now we are going to credit this non-current assets investment by 3 million. Then we debit expenses by 1 million.
Which goes to group profit, have you? Yeah.
Yeah. Then the share premium, we are adding the 2 million. We are adding the 2 million to share premium, right?
How can you add when you are
No,
debiting
we'll
share
remove
premium?
it.
Okay. Okay, sorry, we are
That'll be
going
-2.
Yeah, we are going to credit it.
Debit.
Sorry?
How can you credit? You said
Sorry, we're
credit
going to
3 million.
debit. We are sorry. We are crediting non-current asset, and the corresponding 2 and 1 million, we are debiting them.
That is you solved the question.
Okay, sir. Thank you, sir.
There's nothing big deal in all of these things if you painstakingly listen to the principle. I've continued to tell you, and that's why some people just rely on get certain textbook that just give you question and answer. That will not help. I told you of somebody that have written FR for 3.5 years now. That person scored 64 in this last one. The highest person has scored is no more than 20 something. And the person partook in this online stuff with my text, and he said, even though he has my text for about 3 years, he said it felt like it's more or less just discussing principle, you know. I just want question and answer. Until the person now realized that, I've wasted my years. Let me now sit down. You know what it means to score 64 in ICAN? If you can score 64 in ICAN, if you use that knowledge in university, you score nothing less than 90. Do you get what I'm saying now? Which shows that you're a first-class student. Do you get what I'm saying now? And you need to understand, principle will always set you free. That's why I think the Bible also says that my people perish because of lack of knowledge. You understand? But once you have knowledge at every point in time, it will set you free. It will set, no matter, even though when you find yourself in a difficult situation, it's a matter of time. You will struggle your way out and you come out in victory. That is it. That brings us to the end of the class today. Thank you very much, and God bless you all.
Thank you, sir. Bless you.
Thank you, sir. God bless you.